Hello guys, Steven Lux here. Welcome to this YouTube videos, and today we're going to go over some of the tickers that happened last week. And definitely the market has been gaining tons of volume compared to the last couple months. I think the last relative play we had was BBBY, was trading 300 million volume a day. Now we're getting tickers that's trading around 100 million volume a day, but we're trading in a completely different sector. Make sure to smash the like button and subscribe, and let's get into the video. So we have three tickers that happened last week. As you can see, all of them are biotechs. SMMT, this was pretty much a penny stock, started to spike from 50 cents to $3. Now, the only shortable day was actually on the last day, which is Friday. As you can see, that the stock is gaining volume. You can see the volume is decreasing, but it's trading on a higher price. So the overall traded dollar is much bigger compared to yesterday's, how much dollar is being traded. And it's been running for 4 days. And I want to go over the shorting opportunities on this. So first of all, I want to let you guys know that biotechs are pretty difficult to short into. And the more you short into them, the more you get squeezed. So either you have to wait for perfect opportunities, or you just don't touch it at all. You prefer to go long. On the first green day, if the stock gaps up, if the stock is under $3, I don't consider it as a shorting opportunity. This one went from 75 cents to $4, and during the $4 area, it's consolidating. I was hoping to short into these consolidations. I wanted to wait if the consolidation was actually forming a decent top. So going into Friday, you can use the yesterday's high, which is the 4.50 area. Shorting around there, it is ideal. But there's two things you want to take into considerations. First of all, that when the stock is around $4 and it's only traded 90 million shares overall, then you want to go into the 1 hour chart to actually see how much volume actually traded in the consolidation. So starting from 4, 20 million, 8, 4, so that's 32, 40, 45 million shares traded around 4.2. So a total of $160 million being traded into these consolidations, which is not enough. Typically, whenever you see a market cap that's around 100 million as a starting cap going to a multi-day runner, your dollar block typically is around 1 billion to 1.6 billion. Of course, 160 million is definitely not enough to form a dollar block. Going to a second day, you can use the top to short into the consolidations. And since the dollar block is not enough, and typically when stock heading into a massive resistance from yesterday, before around 12 o'clock, you will start the momentum shift and start going down, going to new lows. But this ticker didn't really do that. So if you short around 4 or 4.2, cover around 3.8 for a small profit. I would cover before 1 o'clock. Since the stock is not performing any type of momentum shift sign, I wouldn't be too aggressive shorting this. SMMT is likely to go higher since you have a neutralized area, which is the first red day around 4. This is likely to go ahead heading into the at least twice as much of the consolidation, so at least $8. That's for SMMT. Do not go too aggressive on this. The technical analysis does not support going to short, so be patient on this one. We have AMAM. This is another biotech. Went from 50 cents to $4, went up almost 1,000% on Friday. And for now, it's a first green day. Tons of volume being traded. So typically on first green day, I do not touch this type of play. I will wait until the second green day. Either it goes parabolic and comes back down, consolidate for a short, or it keeps going. If it gaps down on Monday, trades no volume, then it's not shortable. So for specifically biotechs, you want to more focus on the perfect opportunities, perfect consolidation, and perfect gap down. If you miss one detail, biotechs are very tricky to play with. So in the following examples, I want to give you guys another PHVS. This proves why biotechs are difficult to trade. First of all, we had this semi gap up short push 20% after open. Faded back down, they had one candle squeeze almost to 6 to 7. Going to the second day, it didn't really form any consolidations on the day that went up, which is Thursday. And the consolidation time frame is not even over 3 hours. So it doesn't count as consolidations. Remember, consolidations do require 3 hours of, I would say, minimum time. Then going to the second day, gap down, push back up into the consolidations. You can not on I would say tech sector, any other sectors other than biotech and energy. Overextend gap down works very well. And if the stock tends to lose its liquidity, that's where momentum starts to shift from the consolidation. If it forms a consolidation on the first red day. But you can see the volume is fading and the stock is not even fading. So, and typically overextend gap down fades at least 50% from where you start to spike. So at least fades back to 6 to, I would say low 6. And this one didn't even do that. Going to next week, I do not think this is ideal short. Try to not think this is the first red day. I do not agree with that. And the perfect spot you want to short into on Friday is probably around this $10.50 rejection into this consolidation and cover around 8.5. It's not very good risk reward. So to be able to, I would say, profit from biotechs, first of all, don't short into overextend gap down. Second, wait for a massive dollar block. So either it's 1 billion, 1.5 billion or above. Third, biotech is shortable if the stock goes a couple thousand% in 1 or 2 days for a massive momentum shift. For example, you can check out DWAC. That's very good examples for 2-day runner that goes up a couple thousand%. So that'll be the recap for this week. Let me know if you have any questions. Leave a comment below, and you guys have a great week. And I will see you guys in the next video.